Welcome to the day breaking news. Here's a highlight of the day. Hot inflation fear builds on supersized Fed rate hike. July, the U.S. Federal Reserve is seen ramping up its battle with 40-year high inflation with a supersized 100 basis point rate hike in the month after a grim inflation report showed price pressures accelerating. Everything is in play, Atlanta Fed President Raphael Bostic told reporters in Florida when asked about the possibility. While he said he still needed to study the nuts and bolts of the report's today numbers suggest the trajectory is not moving in a positive way, how much I need to adapt is really in the next question. Bostic has been among the very central bankers in recent weeks, signaling support for a second straight 75 basis point rate increase at their upcoming policy meeting on July 26-27. But after Wednesday data from the Labor Department showed rising cost of gas, food and rent drove the Consumer Price Index CPI up to 9.1% last month from a year earlier, views may be evolving. Traders of future ties in the Fed policy race are betting they already have. They are now pricing a nearly 80% probability of a full percentage point rise at the coming meeting, according to an analysis of the contract that was up from about a 1 in 9 chances since before the report, which also showed core inflation, excluding more volatile food and energy prices, accelerated a monthly basis. The expectation that the Fed will get more aggressive to stop inflation is also rising alarm that policymakers will go too far and create economic growth as well. Used on longer-term treasuries fell, making the so-called yield curve inversion the most pronounced it has been in more than 20 years. An inversion is seen as a harbinger of a downturn because it suggests investors are banking on a growth slowdown. Risk futures trading suggests investors anticipate the Fed may need to start cutting interest rates. The June CPI reports were a shock of disaster for the Fed, wrote SG8 macro advisor Tim Deal. The depending yield curve inversion is screaming recession, and the Fed has made clear its prioritized. Other central banks are also feeling the heat, with the Bank of Canada on Wednesday raising its benchmark interest rate by 100 basis points in a bid to tame soaring inflation, a surprise move and its biggest in nearly 24 years. Thank you for subscribing our channel. I see you in the next newsletter.